Well, the big question, the million-dollar question, is the United States 3 weeks away from financial collapse? Well, we don't know, but that's what some argue the U.S. is getting closer to with its failure to raise the country's $14.3 trillion debt ceiling. Now, despite another week of failed debt talks between lawmakers, President Obama had a press conference today, and he is still pushing for a big, long-term solution. Here's what he said.
I'm happy to consider all options, all alternatives that they're looking at. The things that I will not consider are a 30-day or a 60-day or a 90-day or a 180-day temporary stopgap resolution to this problem. This is the United States of America, and we don't manage our affairs in 3-month increments. We don't risk U.S. default on our obligations because we can't put politics aside.
This coming from officials who haven't been able to put politics aside in missing past deadlines and who are trying to agree on all of this, a big plan to tackle the deficit just 3 weeks before default. International investors such as the Chinese and ratings agencies, we've already seen them concerned. Obama and many other lawmakers say Washington needs to raise the debt ceiling, period. But what happens if it doesn't? Well, Peter Schiff, president of Euro-Pacific Capital, joins us now. He's going to help us try and make sense of all this. Peter, now you, for one, we've talked about this before. You are one that argues for lower corporate taxes in this country. That's something we've seen Republicans want in this negotiation over the scope of it. And also, you have said that the government needs to rein in its deficits, which is something that both Democrats and Republicans seem to want on this deal. So my question for you is, would you risk the U.S. defaulting on its debt in order to achieve some of these principles?
First of all, I think this is a ruse. I mean, the fact that we're talking about default at all merely proves that default is inevitable eventually. The only question is, what form does the default take, and when does it happen? But, if the president was really concerned about default, if Congress was concerned about default, what they would be saying is, don't worry, there is no way we will stop making payments on our debt. We will cut everything else first. We'll cut Social Security. We'll cut Medicare. We will prioritize interest payments and principal payments on the national debt. If they said that, then default wouldn't be a risk. They only want to use this specter of default so that they can have the justification for raising the debt ceiling. The reality is the best thing that we can do for this country is not raise the debt ceiling. And, maybe if Congress votes down a debt ceiling increase, the stock market might sell off, just like the way it sold off when the Congress originally rejected the TARP. But that was the right thing to do, and oftentimes the markets make the wrong move in a knee-jerk reaction. But if you really are concerned about deficit spending, which I am, the only way to stop it is to stop it dead in its tracks. So these are just excuses, that the government is making. And first of all, we have precedents for default. We defaulted in 1971. If you owned a U.S. Treasury bond in 1970, for every $35 you had, the United States government promised to give you 1 ounce of gold. And then we defaulted on that promise. We told our creditors, we are not going to give you any gold for your treasuries. And there was a catastrophic result. It was the 1970s. It was runaway stagflation. The price of oil went up tenfold because we defaulted on that promise. Well,
here's my question to you now. What would happen if we did default? Because people really don't know what would happen in this situation, in this current economy, and where the United States relies on people to buy U.S. treasuries. I want to play a little bit of what the president said the effect would be on American people possibly today at the press conference. Let's listen to that first.
And if you said to the American people, is it a good idea for the United States not to pay its bills and potentially create another recession that could throw millions of more people out of work, I feel pretty confident I can get a majority on my side on that one. And that's the fact. If we don't raise the debt ceiling and we see a crisis of confidence in the markets and suddenly interest rates are going up significantly, and everybody is paying higher interest rates on their car loans, on their mortgages, on their credit cards, and that's sucking up a whole bunch of additional money out of the pockets of the American people. I promise you, they won't like that.
So another recession, interest rates going higher across the board for Americans. Are these consequences that you see being the consequences of a default if the United States doesn't reach an agreement to raise the debt ceiling?
I mean, we're going to another recession regardless here. I mean, I think we're still in a depression, but default is not an automatic consequence of not raising the debt ceiling. The government is collecting over $2 trillion a year in taxes. I think the interest payments on the national debt are approximately $300 billion a year. I'm not sure the exact number, but we have roughly 10 times the money we need. So the only way we will default on our obligations right now, we might do it eventually, but the only way we're going to default on them in August is if Congress and the president choose to do that, because there is plenty of money. And, you know, it's the statements that President Barack Obama is making right now, that's what's threatening our economy, because he is telling bondholders that they are the low man on the totem pole.
But how is he? Because, okay, I hear what you're saying. How is he if he's saying that, you know, if everybody's saying that the debt ceiling has to be raised, the U.S. cannot default? Isn't that aiming to reassure markets?
No, he's not reassuring anybody. He is telling our creditors, the minute we cannot borrow any more money, we will stop paying back the money we've already borrowed. You see, the debt ceiling is about a self-imposed borrowing limit. But what happens when our creditors impose a lending limit? What happens when China says, I don't want to lend you any more money? Then we've already told them what happens. Then we're going to default. Then we're not going to pay back any of the money that you've already loaned us. We are saying to the whole world, this is a gigantic Ponzi scheme. What the president should be saying, what Congress should be saying is, we will honor our debts. Don't worry at all. There is no chance of default. We will make cuts in other spending. But that's not what we're saying. We are telling our creditors that people who get Social Security checks are more important than people who buy U.S. treasuries.
Aren't they? Are they? Are they? Are Americans who rely on Social Security more important to America than bondholders that are investors in U.S. debt?
Well, of course they are. And they're more important to politicians because foreigners don't vote. That's why they should not be saying this. This is very dangerous for the president to admit how weak the position is for our foreign creditors, that we will cast them aside the minute paying interest on the debt conflicts with making Social Security payments. You know, when the dollar was backed by gold, when we promised to pay gold, people knew they would always get value for their treasuries because we were going to pay them in gold. But when we defaulted in 1971, you know, we don't promise to pay anything of value. So the only thing that gives treasuries value is the belief that we are going to have a sound monetary policy. But basically what the president is saying is, no, the minute we have a problem, you're not going to get any money, or we're just going to create massive inflation, and you're not going to get any purchasing power.
I want to ask you, I want to bring in a little bit of the global situation as we see it today, because today we see a demand for the dollar. We see the dollar rising amid concerns over the Eurozone, now fresh concerns over a sovereign debt crisis in Italy. You see treasuries have very low yields, below 3%, showing that people, you know, are willing to not get a lot of return on investment in order to hold U.S. treasuries. So does kind of the news in the Eurozone and the bad news coming out of the Eurozone, is that good news for U.S. lawmakers who are dilly-dallying over the debt ceiling no matter what they say?
Well, first of all, it's not the dollar that's rising. It's the euro that is falling. And so it looks like the dollar is rising until you look at the price of gold, which was up strongly today. It hit a record high in terms of euros. It's almost at a record high in terms of dollars. I think it will be at a record high shortly. So, yes, right now the euro, to some people, looks less ugly than the dollar. That's not how it looks to me. But you're right, we are getting some more rope that we can hang ourselves with because the world is now focusing more on the problems in Europe and ignoring the greater problems in the United States.
What about, going back to the gold standard and what you were saying earlier about that, the Swiss parliament is one that later this year is expected to talk about creating a gold franc, raising the possibility that Switzerland, that was actually one of the last to abandon the gold standard, could take a step towards returning to it. How would that affect the United States and the Swiss economy?
Well, it would be good for Switzerland. I mean, Switzerland has probably the strongest currency in the world right now and arguably one of the best economies in the world. Low unemployment, strong exports, strong growth. So I think anything that they can do to strengthen their currency will strengthen their economy, and I think that would be a step in the right direction. And I think you can see all around the world there is a movement to return to real money. I mean, I myself, I have a bank that I started, offshore bank called Euro-Pacific Bank, and I'm very close to launching the world's first ever gold-backed credit card, Visa card, that my depositors could use to access their gold bullion. And I think this is a trend that is going to continue as people lose confidence in fiat currencies and want to save in real money and transact in real money.
Would it have any impact on the United States?
Well, I think anything that diminishes the appeal of the dollar is going to impact the United States. Because remember, our economy in America right now is based on printing money that cost us nothing and then using it to buy all the resources and all the goods that the rest of the world produces at great cost. And so anything that shines a light on the fact that, we're just counterfeiting money, and anything that looks more appealing than the dollar diminishes our ability to pull off this scam.
Mm-hmm. And really quickly, just to go back to what we talked about at the beginning of the conversation, because I just want to get an answer, because you said that the United States wouldn't actually default if it doesn't raise the debt ceiling, that there are options for the U.S. to pay the people that it owes. So in the situation where the United States doesn't raise the debt ceiling, do you think that what needs to happen is to pay creditors and feel the pain at home? I mean, what is the scenario you would actually look for?
Ultimately, my advice for the U.S. is going to be the same that I'm giving for, Greece right now, or Ireland for that matter. We can't pay in full. Let's just acknowledge it. You see, what's going to happen eventually is U.S. interest rates are going to rise. They're not going to be zero forever. They're going to rise sharply, just like they're rising right now in Italy, just like they rose in Greece and Ireland. And when interest rates go up, we cannot pay. It doesn't matter whether we raise the debt ceiling. We can eliminate the debt ceiling. Nobody is going to want to lend to us, and we're not going to be able to afford it anyway because the interest payments are going to be so hard. So eventually, in order to avoid massive inflation, we are going to have to restructure the debt. We are going to have to cut back on what we pay in principal and interest. And yes, I think that's better than imposing massive austerity on the American economy so we can pay off our foreign creditors. I think our foreign creditors ultimately deserve to lose money because they're stupid enough to buy all these treasuries, and the government is using all that money to undermine the U.S. economy.
And would you accept that correction happening on August 2nd if the United States didn't raise its debt ceiling, and with all the talk that the U.S. has given of defaulting, would you accept that scenario?
Well, absolutely. If the Congress really dug in their heels and said, we are not going to have any more debt, and we're going to restructure the debt, or we're going to allow the economy to restructure. We're going to cut government spending dramatically so that we can. And yes, I would love to see that happen. I mean, that's not what I'm betting on. I own a lot of gold because I don't think that's going to happen. I don't think there's any chance that politicians will do the right thing. That's why my money is on the fact that they will do the wrong thing, which is raise the debt ceiling and keep on borrowing and printing money until they collapse the dollar.
All right, we're going to have to leave it at that. Thank you so much, Peter Schiff. As always, a pleasure. He is president of Euro-Pacific Capital.